Good morning. Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we try to help you stop overpaying taxes by utilizing tax shelter retirement accounts to build real retirement wealth. Today's topic is, how do I close my solo 401k plan, also known as a self-directed solo 401k, self-directed 401k, and so forth. We're going to go over that topic. Also, this is your chance to ask questions. So go ahead and type those questions over. We'll pause and answer those questions as they come in. They don't have to be specific to today's topic. They can be surrounding solo 401k plans in general, as well as IRAs in general. So go ahead and type those questions over and we'll get to them as they come in. So let's continue with our topic for now. So a self-directed solo 401k is one of the most powerful retirement tools available to the self-employed. However, what happens when your business activity ends or you are no longer eligible to maintain the solo 401k plan? So closing the solo 401k plan is not automatic, and failing to close it properly can result in IRS penalties, which can be in the thousands of dollars. So today's webinar hopefully will guide you on how to properly close a solo 401k, as well as understanding what happens to the assets inside the plan. So obviously you cannot keep a solo 401k without a self-employed business. In order to maintain a solo 401k, you must have ongoing self-employment activity. So you have to be performing material services. As a result, if your business ends, you must close the solo 401k plan. So oftentimes you are required to close a solo 401k plan due to the following. The business closes, so the business shuts its doors. You are no longer self-employed, and now you've decided to go work for a full-time employer who offers a 401k plan, for instance. And more on that in a moment. Or you may just simply retire. So now you've reached your golden years and it's time for you to start enjoying life more. So those are the common reasons why a solo 401k plan must be closed. And this is different from a traditional 401k, aka a 401k offered by your daytime employer. When you leave your day job employer, you're no longer working for that business, but that 401k continues, and so does the business. And therefore, you're able to leave your 401k funds in that former employer plan. So the business is not closing, you're just simply no longer working for that employer, and therefore that plan continues. Well, with the solo 401k plan, you are the employer and the plan sponsor. So if your business ends, the plan must be formally closed with the IRS, because you cannot continue to sponsor a solo 401k plan without a business. So let's discuss why proper closure of the solo 401k plan matters. So again, a solo 401k does not simply expire when your business ends. The plan has to be properly closed. If it's not properly closed, it's going to be considered an active plan with the government, resulting in having to file annual returns for that plan until it's fully closed, and then failure to file to formally close that plan with the government can reach thousands of dollars, especially failure to file the final Form 5500 easy. So proper plan termination is essential to avoid unnecessary IRS scrutiny and, more importantly, penalties. So let's talk about the required IRS forms when formally closing a solo 401k plan. So when a solo 401k plan is closed, two IRS forms are required, regardless of the account balance. The first one is a final Form 1099-R. A Form 1099-R is issued to report the direct rollover of that solo 401k to your IRA or to your full-time employer 401k. If you go back to working in corporate America, for example, and you work for an employer that sponsors a 401k, then you can transfer the solo 401k plan to what's referred to as a full-time employer plan. And you can actually transfer those funds in kind, including any assets like stocks, for example. And we'll talk about that more. It's the Form 1099-R also must be issued if you take a distribution. So if you decide to distribute the funds from the solo 401k plan, where you take receipt of the funds personally and you put them in your personal bank account, then that's going to be a taxable event. And that also requires the issuance of a Form 1099-R, because that's part of closing the plan down. And the Form 1099-R is typically due to the IRS by February of the following year. The second form that's required to formally close a plan with the government, and this form is always required as well. It's a Form 5500 easy return. So even if your solo 401k plans, even if your solo 401k balance was under $250,000 when you transferred all the funds and assets out of the plan, a final Form 5500 must still be filed, because it always applies regardless of value of that plan when to formally close the plan with the IRS. So this is the common misconception where individuals think that they don't have to file a final 5500 easy because the value of their plan was under $250,000. That under $250,000 threshold only applies for a plan that's active, where you're not required to file a Form 5500 easy until the value of the plan is greater than $250,000 in value. However, that rule is different when closing down a solo 401k plan. Regardless of value of that plan, you have to file a final Form 5500 easy, because again, that form is required when closing the plan down with the government, just like a Form 1099-R is also required. So failing to file a final Form 5500 easy is one of the most common reasons solo 401k owners receive IRS penalty notices. I've seen some penalty notices range from $10,000 and excess of $200,000 for failing to file a Form 5500 easy. So again, go ahead and type over any questions you might have during the live webinar. Also, please like today's video, subscribe to our YouTube channel. Please like, like us across the various social platforms. Doing so helps us get the word out to other solopreneurs who might find this information useful. So again, today we're talking about how to close a self-directed solo 401k, aka self-directed 401k, solo 401k plan properly with the government. Now, when you want to do some planning when you're closing a solo 401k plan, so you want to make sure that you get your solo 401k in order, especially investments, or if you have an outstanding solo 401k participant loan. Let's talk about what happens to your solo 401k investments or assets inside the plan. So, when closing a solo 401k plan, you have several options for the funds and the assets inside the plan. One option is to transfer the funds and assets to an IRA. So the funds and assets can be directly rolled over to a traditional IRA or a Roth IRA if you also hold the Roth solo 401k funds. And this is a non-taxable direct rollover, which will result in filing a Form 1099-R to report on non-taxable direct rollover from the solo 401k plan to the IRA. If you hold any investments like stocks, so equities, whether it's exchange traded funds, mutual funds, index funds, those do not need to be liquidated. You can actually transfer those equities in kind to an IRA. So no liquidation is required of those investments. For example, many of our clients who utilize our solo 401k plan will use Fidelity Investments to hold the solo 401k funds in a non-prototype brokerage account, which will help the client to open. And they also will open up an IRA at Fidelity eventually, especially when they want to close the solo 401k plan. So they'll be able to transfer those securities, so stocks, index funds, in kind within Fidelity to that IRA so that those investments are not liquidated. That would be referred to as an in-kind direct rollover from the solo 401k to the IRA. Option two is you can transfer the solo 401k funds to a full-time employer 401k. So if you went back to working for corporate America, as I mentioned earlier, those funds can be transferred and the investments can be transferred to that full-time employer plan. If that full-time employer plan will not accept those investments, then you would need to liquidate those securities because not all full-time employer 401ks allow for equities, and they may only allow for a certain type of mutual funds or index funds, for example. So another option is, besides transferring it to an IRA or to a full-time employer 401k, is you can take a taxable distribution. This is obviously not the best option from a tax planning perspective. But this, because this can be a costly option. Because when you distribute funds from a solo 401k plan, it's going to be fully taxable as ordinary income. So it could even bump you into a higher tax bracket besides having to pay federal taxes. You may have to pay a 10% penalty if you're under age 59 and a half. And of course, state taxes may apply depending on your state of residence. So this option is generally used when no rollover alternative is desired. So you typically want to transfer it to an IRA or to a full-time employer 401k if you go back to working full-time for an employer. Let's see here. Let's keep going here. So what happens if your solo 401k plan holds alternative investments like real estate, cryptocurrency, private equity, precious metals, and so forth. If it holds those types of alternative investments, you can open up a self-directed IRA. So that way you don't have to liquidate those investments, and then you can transfer those investments in kind to that self-directed IRA. So if the plan holds real estate, like a rental property, for example, you would transfer the property in kind to a self-directed IRA where you would have that property granted. So you would work with your county recorder and having that property granted over in the name of that self-directed IRA custodian for the benefit of your IRA, for example. And then the self-directed IRA custodian will book that asset on their books as being held inside that self-directed IRA. So again, alternative investments do not need to be liquidated when transferring them out from the solo 401k plan, as long as you transfer them in kind to a self-directed IRA. And by doing so, this will allow for continued tax advantage status. So those investments will continue to grow tax deferred inside that self-directed IRA, because you're not forced to liquidate those alternative investments. And therefore, there's no immediate tax consequences because they are properly directly rolled over to that self-directed IRA. Other items to consider when closing the self-directed solo 401k, it's outstanding solo 401k participant loans. With the solo 401k plan, as the participant, you can borrow from your own solo 401k plan through a solo 401k participant loan where you can borrow 50% of your balance, not to exceed $50,000. However, from a solo 401k closure side of things, if your solo 401k has an outstanding solo 401k participant loan at the time of plan closure, then the outstanding loan balance must be paid back in full before you can close that plan down. If not repaid, the outstanding solo 401k loan balance will be treated as a taxable distribution, resulting in having to pay taxes on that loan distribution. So don't overlook the fact that when you close a solo 401k plan, you need to make sure that you understand the rules surrounding that solo 401k participant loan. Now, for my solo 401k financial clients, we'll assist in closing that solo 401k plan as long as you timely request that closure, and you need to make sure that you are current on all your solo 401k annual fees. So if you have past due fees, you need to make sure you bring your account current regarding fees and pay the final annual fee, and we'll gladly help you to close the solo 401k plan with the government. So for clients who timely request plan termination services, my solo 401k financial prepares and supports this transition by filing a final Form 1099-R. Also, preparing the Form 5500 Easy. We'll also guide you on the rollovers and transfers, especially in-kind transfers. If you have alternative investments or equities, to make sure those are now liquidated and properly transferred to the IRA that you choose to transfer those assets to. So having these forms prepared correctly ensures your solo 401k is officially closed with the government in a compliant fashion. So in short, closing a self-directed solo 401k is not optional when self-employment ends. And it's not something to leave to chance. A proper closure of a solo 401k plan includes formal IRS termination. So filing both a Form 1099-R and a Form 5500 easy. Also handling the assets correctly, including the alternative investments when they get transferred. Also making sure you address any outstanding solo 401k participant loans. So when done correctly, closing a solo 401k is straightforward. Done incorrectly or not at all, it can become expensive and stressful. So if you're approaching the end of a self-employment or transferring to a new career, planning your solo 401k exit before year end can save time, taxes, and penalties. Okay. Again, please like and subscribe to our YouTube channel. Like us across all the various social platforms. We appreciate you investing your time with us today. We know your time is valuable, but we feel that your solo 401k and IRA future depends on it, and it's worth it. So if you haven't yet, again, please like and subscribe to our YouTube channel. Like us across the various social platforms to help get the word out to other solopreneurs. We'll be back here again in a few hours with more information. Until then, have a good rest of the day.